Intel's story is a parable of modern technology. A titan that once defined the pace of progress, stumbled into irrelevance, and then clawed its way back from the brink. To understand the scale of its comeback in 2026, one must first revisit the decades of dominance that preceded its decline and the humiliations that nearly buried it. In the 1980s and 1990s, Intel was not just a company. It was the beating heart of the personal computer revolution. Its x86 architecture became the standard. Its processors powered everything from IBM PCs to Apple machines, and its engineers were the custodians of Moore's Law. The Intel Inside campaign turned a technical component into a household brand, convincing consumers that the chip mattered as much as the logo on the case. By the early 2000s, Intel was a colossus, with revenues soaring and influence unmatched. Its fabs were marvels of engineering, its cadence of innovation relentless. Competitors like AMD existed, but they were sideshows, forever chasing Intel's tail. Yet dominance breeds complacency. By the mid-2000s, Intel's manufacturing roadmap began to falter. The transition to 10 nanometers was plagued by delays, and the company's once vaunted TikTok rhythm of innovation broke down. Engineers whispered about bureaucratic inertia, about managers more concerned with politics than progress. Competitors seized the moment. AMD, long dismissed as a perennial underdog, surged back with its Ryzen processors, offering superior performance at competitive prices. NVIDIA, meanwhile, rode the GPU wave into dominance, becoming the face of artificial intelligence and high-performance computing. ARM-based designs proliferated in mobile and server markets, threatening Intel's dominance in areas it had once considered unassailable. By the early 2020s, Intel was no longer the leader, but the laggard, mocked for its missed deadlines and bureaucratic inertia. The humiliation was compounded by failed ventures. Intel's attempts to break into mobile chips ended in disaster, with Apple and Qualcomm leaving it in the dust. Its acquisitions, from McAfee to Altera, failed to deliver the transformative impact investors had hoped for. The company's culture, once defined by engineering excellence, seemed bogged down by politics and indecision. Analysts began to openly question whether Intel could ever catch up to TSMC and Samsung in advanced process technology. The phrase, "Intel is dead," became shorthand for a giant that had lost its relevance. And yet, giants rarely die quietly. Beneath the surface, Intel still possessed immense assets. A deep bench of engineering talent, a sprawling manufacturing footprint, and a brand that, despite its tarnish, retained symbolic power. What it lacked was vision and execution. That changed in 2025 when Lip-Bu Tan, a veteran of the semiconductor industry, took over as CEO. Tan's arrival marked the beginning of Intel's improbable comeback. Tan's strategy was bold and unconventional. Rather than retreat, he doubled down on manufacturing, committing more than $100 billion to new fabs in Arizona, Ohio, and Europe. These were not just corporate investments, they were geopolitical statements. In an era of rising tensions between the United States and China, and growing fears of over-reliance on Taiwan's TSMC, Intel positioned itself as the linchpin of Western semiconductor sovereignty. The CHIPS Act provided billions in subsidies, and Intel became the poster child of America's industrial policy. Suddenly, Intel was no longer just a struggling company. It was a national champion, a strategic asset essential to technological independence. The manufacturing push was accompanied by technological progress. Intel's long-delayed 18A node began to show real promise, with yield improvements and power efficiency gains narrowing the gap with TSMC. For the first time in years, the narrative shifted from skepticism to cautious optimism. Apple's reported interest in Intel's advanced packaging services underscored the seriousness of the turnaround. Intel was no longer failing at the basics, it was executing, and execution breeds confidence. At the same time, Intel tapped into the hottest trend in technology: artificial intelligence. As AI workloads exploded, demand for CPUs, GPUs, and advanced packaging surged. Intel positioned itself as a critical supplier, not just of chips, but of the infrastructure needed to support AI's insatiable appetite. Its data center and AI segments grew rapidly, with revenues climbing more than 20% year over year in early 2026. Suddenly, Intel was no longer a laggard, but a participant in the most exciting frontier of computing. The financial results reflected this momentum. In April 2026, Intel shocked Wall Street by reporting $13.6 billion in quarterly revenue and earnings per share of 29 cents, demolishing expectations of just 1 cent. The market responded with Intel's best trading day since 1987, as shares soared 24% to close at $82.57. Over the past year, the stock had risen nearly fivefold, making Intel the year's biggest comeback story. For investors who had written the company off, the rally was vindication. For skeptics, it was a bubble. But for Intel, it was proof that resurrection was possible. The comeback was not without controversy. Valuations stretched to dizzying levels, with forward earnings multiples exceeding 150 times. Analysts warned of overheating, and debates raged about whether Intel's rally was sustainable. Some insiders sold shares, while others doubled down. The tension reflected a deeper uncertainty. Was Intel truly reborn, or was this just another bubble inflated by hype and government subsidies? The answer remains unclear, but the momentum is undeniable. To understand Intel's revival, one must appreciate the interplay of technology, geopolitics, and psychology. Technologically, Intel proved it could still innovate. Geopolitically, it benefited from a world desperate to reduce dependence on Asian foundries. Psychologically, it tapped into investor nostalgia and national pride. Intel was not just a company. It was a symbol of resilience, of America's refusal to cede leadership in a critical industry. The story of Intel's comeback is also a story of humility. For years, Intel had been arrogant, dismissive of competitors, and slow to adapt. Its decline was self-inflicted. The revival required a cultural reset, a willingness to admit mistakes, and a hunger to prove itself again. That humility, combined with bold investments, created the conditions for rebirth. As of 2026, Intel is not yet the undisputed leader it once was. TSMC remains dominant in advanced manufacturing, NVIDIA continues to ride the AI wave, and AMD is still a formidable competitor. But Intel is no longer dead. It is alive, fighting, and relevant. Its fabs are humming, its technology is improving, and its stock is soaring. The comeback may not be complete, but it is undeniable. In the end, Intel's journey from the proverbial dead to rebirth is a reminder that giants can stumble, but they can also rise again. It is a testament to the power of reinvention, the importance of execution, and the enduring relevance of semiconductors in shaping the future. For investors, engineers, and policymakers alike, Intel's story is not just about one company's fortunes. It is about the resilience of an industry, the stakes of technological sovereignty, and the possibility of redemption in the face of decline. And that wraps up today's deep dive from the Situation Room. If you enjoyed this breakdown, make sure to like the video, subscribe to the channel, and comment below with your thoughts. Don't forget to follow us for more global analysis and hit that notification bell so you never miss the next Situation Room update. See you in the next one.